Welcome back to another quick update. So the first chart I'll open up is of Nifty 500. We have now had 6 weeks of decline. I'll explain the chart a bit. This is normal candlestick chart. This blue line that you see is a 30 weekly moving average. Why 30 weekly? Because I follow the teachings of William O'Neill and Stan Weinstein. This is the ratio line that is Nifty 500 against Nifty. I want to check the performance of broader market against a benchmark index like Nifty 50. So if you look at what is currently happening in the market, 6 straight week of declines, a simple Fibonacci retracement will tell you we are not yet in the 38.2% zone. 38.2 is somewhere between 22,092 and 21,596. And it is entirely possible we come down, we test out these zones. This is also somewhere closer to the 200 DMA. If you've seen the last week's video, then there is a possibility of we coming down, that is below the 200-day mark, forming a consolidation kind of base and heading higher. It is just that as the price is following, obviously the news flow is not great, portfolio has taken a hit, and this is normal. This is normal because humans are inclined towards a lot of recency bias, and whenever they see fall coming in stock market, they will obviously think that this is going to continue and hit a new low and take it out, because that is the kind of news cycle that flows. Plus, you have to be worried about what is currently happening in the global market more with respect to US turning against India. The logic is just not there. But then these days, whatever the president of United States does, there is no logic to it. It is just some whims and fancies of what he thinks is right. My personal take is that this is in line with what we have been discussing in the entire year: a rally, a pullback, some bit of base formation, and a clear trend formation only in 2026. I still stick by that. Is it possible that we head into a new low and a bear market again begins? See, this is stock market, anything can happen. That is why risk management is paramount. But I'm fairly confident that we are going to stop somewhere closer to this level or maybe somewhere here, form a base, and again move higher. So this particular analysis that I'll do, it will have two parts to it. The first couple of minutes is for long-term ETF investors, then I'll come to the trading part. And I don't cover anything short-term on this channel. So in case you're interested in short-term channel, then obviously this video won't be of any use to you. So first I'll take you back to pre-COVID era between 2010 and 2020. It is important to understand how stock markets behave. A post-COVID era has actually had such beautiful trending phases that is considered to be a norm in stock market, whereas that is not true. If you look at periodic performance of stock market, this is between 2010 and 2011, the correction was about 30%. The more appropriate correction given what is happening today is a correction that played out between Jan 2012 and something like June, where price went below the 30 weekly moving average, 200 DMA, and finally made a bottom 15% below it. Another instance is a complex correction in 2013, which was again a 20% kind of a correction. One more complex correction came about in 2015 and 16, again 24%. This was a correction that was in August 2016, about 11 odd percent. And then before COVID, this was again a complex kind of a correction where we fell about 16 odd percent, but over a period of time we headed higher. This is the kind of market we are into, where long-term investors, even long-term traders, have to take use of what is happening today. You can do this easily via ETF if you invest in probably a Nifty ETF or Bank Nifty ETF. We have a defense ETF, we have capital market ETF, we have healthcare, we have IPO ETF. If you are an ETF kind of an investor or a long-term trader, also make use of this dip that is coming in the market. See, no one knows what is coming in stock market. Ultimately, you have to manage your risk out in case you are building a portfolio, that portfolio goes down minus 5%. You can have a hard stop loss there and then review what you have to do. It is not that you have to remain invested even if you get a vertical drop of, let's say, 15-20%. A trader is always proactive. A trader is always managing his risk as the market is dishing out data. So I don't find anything a lot concerning today. For me, on a higher weekly time frame chart, as I've explained last couple of weeks, we are forming a major pivot, and the retracement that will begin post this major pivot is what will give us amazing insights into what is coming ahead. I still feel we are heading higher. We will be in a choppy phase. It's not that, I mean, like you, I've also faced a lot of positions that have gone against me in the last 6 odd weeks. I've not touched one of my winners also. I've cut out a lot of loss-making positions, have raised cash. Today my cash level is somewhere between 38-40%, and I'm waiting. I'm waiting for some sign from the market to again start buying into the sectors that I am keeping my eye on. That is capital market, it is metal, it is defense, it is financial services, ex banks, it is some bit of PSU bank, it is the hotel sector, it's the insurance sector, healthcare sector, some bit of nifty IPO stocks also, because this index is forming a beautiful structure. Uh, Again, finance I've spoken about, and this is hospitals. So these are the 6, 7, or maybe 8 pockets that I'm interested in. I'm just waiting for the market to stabilize. Again, I'll start deploying cash, but I'll only be trading on the long side. I'm just not interested in making some pennies on the downside in terms of short selling, because I feel the day market reverses, it is going to reverse suddenly, and that move will catch a lot of people off guard. You also have to understand how generally positions are built in the market. See, majority of participants in the stock market come when you see such candles, because this is when the news flow, this is when the social media handles, this is when the YouTube videos are all giving out massive positive commentary. You'll rarely find people coming in this phase. If you recollect all my videos in this phase, there was a one message that I gave out: correction is always an opportunity. It is a massive opportunity in the market, and slowly and gradually you have to buy. And this is again the message I'll give out today. This is not even a proper correction. This is just a routine consolidation happening in the market after we have rallied about 24%. How much has the market fallen? This is something you always have to ask yourself. The market has fallen about 5.5%, I think, 5.3%. A 5.3% move in the market cannot be termed as a crash, cannot be termed as a major correction also. This is just a routine consolidation. Prior gains are getting digested and nothing else as of today. More important factor that you have to consider is that as people build positions when the market moves up, little bit of retracement also takes away a lot of those gains. And this is where a lot of people start losing focus. Remember, stock market is a machine that is going to test out your conviction, that is going to test out the conviction in your process to the maximum amount that you can ever imagine. So keep your heart where it is today in terms of putting the effort, follow your process, because till date market has delivered negative return year to date. This is important. It is important because as traders and investors, we make money when the broader market moves up. When the broader market itself struggles, then it becomes a bit difficult to make a lot of returns in the market. So based on where we were on 1st Jan 2025 to where we are today, majority of the market is actually between -1% to -11, 12%. That is, realty and IT sector are double digit, -11 and -13%. And Nifty 750, that is total market index, I think is down 1% for the year. So if you have given back a lot of gains in this pullback, this is fine. This is fine because the broader market itself is not doing that great. And that is why the base premise that I've been explaining in the past few weeks about a sustainable rally coming in 2026 is because 2025 year seems to be a year of digestion. It can easily turn out that this turns out to be the range for the year, where we can even come down a bit lower, and then within the range we can move. The only way to navigate this is, as you build positions here, as the pullback begins, start cutting all your loss making positions and retain your winners. Retain your winners, because whenever the market will stabilize again and it starts again moving higher, this is when your winners will compound your money. And then you can also identify new names that are setting up. And as the market will again pull back, repeat this exercise. As the market pulls back, cut down all your losers, add to your winners. Any winner that turns out to be a loser, again, cut it out completely. You will get a lot of opportunity to build position. You look at the small cap space, you look at the micro cap space, all are down between 6.5%, 7%, 8% for the year. So don't lose hope. Don't lose your heart in terms of ignoring your process. Market is testing out. There are a lot of things that are happening in India that are out of our control. There is only so much that can be done from the side of the government also when one-sided kind of approach is taken by a country, of course a superpower. Also, do not forget there will be a lot of disruptions in market. Now, the earlier part of our trend in the month of February, March, April, May was largely affected because of global markets also. Then we had our own conflict with our neighbor. And this conflict situation will again arise. Mark my words, it is again coming because now our neighbor is thinking that the most powerful nation in this world is siding with them, and they just won't learn. It also brings you to a larger point that there is something that has happened during that confrontation that has upset the world's supposedly strongest country in some way. And this is why it seems so much like a personal vendetta as opposed to something that the government has done policy wise to upset some key people. So this will pose challenge for the market. I think our markets are going to be fine. We have a lot of liquidity currently in the system. It is just a phase where market is testing your patience, and it's not an easy phase, but it will eventually pass. India, both as a civilization for the last 5,000, 7,000, 10,000 years that we have been, and from stock market point of view, right from 1990, has weathered all these storms very well, and we still will manage our way out of this. It is in our blood, and this is something nobody can change. But the fact remains that if you have a short term view on this market, short term positions, especially in FNO, you will face a lot of losses because someday some statement will be coming out and the market will be gapping down. Someday a policy will come out in favor of market will be gapping up. And that is where short term players will get butchered. This is a theme. 2025 is turning out to be very painful for short term players, and it will continue to be that way. Whereas for long term players who systematically allocate money, who make use of dips, 2025 will be the bedrock for amazing returns coming in 2026. This is just how I see the global market picture. So there are two slides that I'll repeat again from the Jan Feb cycle. It is relevant today, but because again we are undergoing a phase where market is pulling back. The first point is about rebalancing and strengthening your portfolio. You have to sell out your weaker stocks, reallocate the funds to your existing winners. If your existing winners start giving you losses, cut it out quickly. Remember, you can again enter later, but protect your capital. If the stocks you selected in the earlier cycle, all of those stocks are giving you losses, it's probably because your position sizing and scaling and techniques are not right. Refer to late Dr. Van Tharp's book. He has given you amazing techniques to position size and how to scale in while keeping your gains intact. The second is use a rupee cost averaging strategy. As market is moving lower, whether you like defense, whether you like capital market, whether you like investing in IPOs, whether you like the banking sector, invest small amounts as the market is making a new low. Don't be blind about it. I've already mentioned in the last couple of weeks how you need to measure the trend in terms of major pivots. But at least till those pivots are not taken out, make use of rupee cost averaging strategy. This is something that has worked in the last 25 years. It will still work in the next 25 years, provided you invest small amounts gradually. Make use of volatility. Last point, stay emotionally strong. Stay emotionally strong because corrections make people emotional and it leads to a lot of bad decisions. It leads to a lot of reading of various posts on social media, watching a lot of sensational content on social media. This is harmful for your psychological health and financial health. You have to learn from past investors who hold on to their position whenever such things are happening, they add more. Lastly, what kind of stocks you have to keep on your radar? Those stocks that are defying the trend of Nifty or Nifty 500. Currently, Nifty 500, by the way, this is a chart of February. I'm again repeating it. Go back to this chart. In the next 15 odd days, Nifty moved lower. A lot of stocks were doing this and broke out. Look where those stocks went. So this is a template you again have to remind yourself about and follow. As Nifty 50 and 500 are moving lower, there are some stocks that are refusing to fall and have started doing this. Go behind those stocks. Keep them on a watch list. As soon as you see a breakout happening with volumes, start accumulating gradually. This is the only way you will be able to make use of correction. So the broad theme remains same. We are currently pulling back in a larger uptrend. That is what I feel. I can be clearly wrong here. And I have the right to be wrong, but I'm pretty confident our economy is fine. There is an abundance amount of liquidity in our system. And currently, whatever things are happening over a period of time, that will die down. But 2025, even the remainder of 2025 is going to be volatile. It is going to be painful because of a lot of global things. And of course, there are some specific things that India is facing, nothing that we haven't faced before. So be optimistic, keep doing the homework, stick with your process, be emotionally strong, And remember, every correction is an opportunity in stock market. So have a great weekend ahead. I'll see you next time. Take care. Be safe.